Welcome back, value investors. We just finished the eighth straight week of stock prices going up for all three indexes. And it's been a fun time to own stocks. My portfolio's up, and I hope your portfolio has been going up really fast. And it's been a fun period. And I'm going to review what's really been working in the month of December. And really, I think it began on October 27th or 28th. This rally has just been going and going. And there's been a lot of news that could have held the stock market back. And there's been a lot of news that has really pushed the market forward. It's interesting how things played out. I'm a value investor, so I'm always looking for what's going to work next. It's not a set it and forget it strategy. I have to continually look at my portfolio and determine, okay, what worked last year is not going to necessarily work next year. So what's going to work in the next 6 months? And where should I be moving my capital towards? And that's what this video is principally going to be about, is a quick review of what's been going on, but really focused on where could I find value? Where is the next, area or sector or class of investment that's really going to work in 2024? Before I jump into the video, do me a favor and like my video and subscribe to my channel. And please leave a comment on what you think is going to work in 2024, what you think is going to be a good investment in the new year. So what's really stood out over the last 8 weeks is how the Russell 2000 has just really taken off. And the Russell 2000 is made up of small and mid-sized stocks. It's up 24.25% since October 28th. In less than 2 months, it's just really taken off. And certain small and mid-cap stocks, it just caught fire. It's been really interesting. So that's really worked for the last 2 months. I happen to think that's going to keep working. And the reason for it is you can see in the chart here, the Russell 2000 was falling behind. There was a pretty good gap between the Russell 2000, the S&P, and the Dow. And it really caught up. See how it's really caught up here? I'm looking at the 6-month chart, but it's really caught up and it's made up some of that lost ground. But I think it has more ground to make up. As you look at small cap stocks and mid cap stocks, there's a lot of them that have very low PEs. A lot of those companies are growing their revenue, are profitable, and they generate free cash flows. What is harder with smaller companies is the Russell 2000 index has 2,000 companies, and many of those companies are unprofitable. Many of them have metrics that look quite terrible. And when you look at the whole index, it is confusing. It's hard to find those gems within that index. But when you do find them, you find really good value. So I've really have been spending a lot of time this year and more recently, a lot of time trying to find more small and mid-sized companies that I can find that I feel are undervalued and are going to go up over time. Now, when we buy value stocks, it's not guaranteed they're going to go up, substantially in the next month or a quarter. But doing our analysis, I can safely think that over time, that stock price is going to be equal to the value of that company. Might take a year, might take 2 years, but most typically, a good company that's growing, generating free cash flow, profitable, that stock price is going to go up. So I've been really spending a lot of time finding companies that are going to be good companies to buy more shares in. The other thing that I've observed is that the S&P did go up 15.48%, which is excellent in any year. But I think the growth in the values of those stocks is slowing down. And I'll go into how mega cap stocks in particular, they are so valuable right now. It's for me as an individual value investor, it's hard to imagine how these massive cap companies can continue to add market cap. It's just really hard to fathom. But they have been in this year, but it is slowing down. And I'll get into where I think these mega cap stocks are going to go in 2024. Overall, the NASDAQ's been doing really well. NASDAQ tends to have higher growth companies in both technology and healthcare and so forth. And the NASDAQ, I think the rise in the NASDAQ is really helped by lower interest rates. If you have lower interest rates, fast growing companies are going to be valued more because the discount rate is different. We discount the future expectations of a company. And if your discount rate is lower, the value of that company is going to be higher. So overall, all the indexes did well, but the star of the show is the Russell 2000. Now, stock prices went up because investors were comfortable investing, and that's represented in the VIX. The volatility index has really gone down. Over the last 2 months, the volatility index has really, really gone down. So investors are more inclined to invest. And I think there's a couple of big factors in play. One, the a lot of investors were in cash. Cash is earning about 5%, and that's not bad, especially compared to a couple of years ago where you were just battling just to earn 1%. So now earning 5% seems comfortable to many, and I can understand why. But I think as investors, we're seeing the high returns in the stock market, 20% plus, and especially some stocks that are pretty big brands are just taking off. Those investors realize that, they're not earning 5%. If you look at the S&P as an example, up about 25%, they are losing 20% because if you had that capital in stocks, if you just bought the S&P index, you'd be making 25% return in 2023. So I think that type of mentality is changing very quickly where investors are realizing, hey, being in cash may feel comfortable and safe, but I'm giving up 20%. Every year that I stay in cash, potentially I could be giving up a lot of gains. So the mentality is changing. And I think it's showing up in the VIX where investors are really, there was too much caution probably beforehand. Some of that caution is a good indicator of last year, 2022, especially technology stocks really were beaten up. They went down big time. And in general, stocks went down in 2022 substantially. So that recent memory has probably had a lot of investors gun shy in 2023, but I think they're getting off the sidelines and getting back into the stock market and buying up shares. Over the last few months, the sectors that are performing best, there's been a reshuffling of which sectors have been doing the best and which ones are beginning to fall behind. Let me go over the best performing sector for the last month has been real estate. And real estate has benefited from lower interest rates. I think the big scare around real estate is beginning to not necessarily completely go away, because I think especially for industrial space and office space, I think real estate still has a lot of problems. But I think it was so beaten down that it's really come back. So real estate's been the number one sector for the past month. And if you look at the last 3 months, it's really done well. I believe it's only outperformed by technology. So it's been really having a good quarter. And I think it has more value left. I've been looking at real estate companies, real estate investment trust. I've been buying additional shares. It's not a big portion of my portfolio. It's part of my income portfolio. And I'm not buying a ton of shares, but I have to, really look at the data. And the data is telling me, you got to up your investments in that area. The next sector, consumer discretionary. This one is interesting. It's somewhat of a very large sector that has a variety of types of companies. For example, Airbnb is a consumer discretionary. That's interesting because I think of it as a technology company, but it's in there. So is DoorDash as an example. So those are two stocks that I own that are very technology oriented, but they're in just consumer discretionary, as well as what I think of in that category is premium products like luxury items. But that particular sector has done really well over the last month and the last 3 months. So there's some good value there. How much value is left? I think you got to be a really good stock picker to find the right investments in that particular sector. Moving down to industrials, industrials have really been rocking. They've really taken off. And I think a lot of the industrial complex is beginning to warm up. It's beginning to take off. Shipping companies are doing better, especially ocean freight shipping companies are doing well. The shipping rates have gone up. So that's an interesting sector. I think there is value in industrials. I think it's a little bit ahead of a growth cycle. We're still expecting a mild recession to come, but that tells us that, hey, that sector, you may be buying in early, but I think over the next 2 years, it's going to really reward investors. Financials has really been working. It's been really working for me. And I think there's a lot of room left for that sector to keep growing. We're talking about banks, financial services. It's a really prosperous sector. Historically, it's done really well. And my investments in financials have just been doing great. And I think they're going to continue to do well into 2024. Materials have been doing really well. And I think materials are going to be a very prosperous sector and finding the right material companies. So there's companies that mine and provide the right types of materials that the market needs. For example, AI is not going to grow unless we have enough copper, enough materials for the chips. All those materials, they come from somewhere. And I think understanding which material companies are providing that is important. And looking at the companies that are discounted and then buying up those companies. So materials is a category that I've been growing my portfolio around and trying to find a couple more companies. For example, I started buying into 3M, and I'm not sure if 3M's in materials or industrials or both, but that's an example of where I'm growing my portfolio. So that's everything that's done better than the S&P above the line. Some categories that I'll point out is healthcare. Healthcare is a category or a sector that I've always liked investing in. I really believe in that sector, and it's just underperformed in 2023. I think it's going to offer up good value going into 2024, frankly. The two sectors that have been just performing awesome, information technology. I don't think I need to convince anybody of how well it's done. Year to date, it's up 56%. And communication services. So this is Netflix. This is Meta. This is Alphabet. And it's doing great, 54.99%. So these two have done great. Are they going to repeat in 2024? I think it's going to be tough for the whole sector to repeat that type of performance. If it was growing at 56% year over year, that would be incredible. But I think it's nearing the level of impossible. So I think picking the right companies in those spaces, and I would say that certain investments in that space are about having a real long-term vision. Do you want to be an Apple stockholder or not? And really think about it, over a 5-year horizon, because some of these stocks are just so darn expensive. They may go down 10, 20%, but you may see the stock be double its value in 5 years. So that's a type of thought process that I think we need to make on some of these sectors that have done really well. Consumer staples hasn't really done anything. I'm not expecting it to do much. I think consumer staples has to compete with these other sectors that are just doing really well. So capital is reluctant to go to consumer staples, but it's good to diversify. I've got a couple companies in that space. For example, Kroger, I just did a video on Kroger. That's one of my good stable stocks, and I'll continue to own that company because it's a high quality company. Utilities, I don't do much with utilities. I think that's somebody else's investment. I don't like the level of capital you have to put into the business and just a constant reinvestment of capital. It seems like you have to rebuy the business based on the capital outlay every couple of years. But it's somebody else's investment. They pay high dividends, and it hasn't been performing very well. Energy, I own Chevron. It's a big position for me, and it's somewhat of a hedge. And I'm happy with the year that I've had for my portfolio. I've beat the S&P. I've grown my capital. It's really, really, really good. But energy's lagged, and that's okay. I think some years when everything else is down, energy's up. For example, 2022, energy was up, and that was one of the big winners for me in 2022. While some of my, investments like Meta, Amazon, Alphabet, Netflix, those were really down in 22 while energy was up. So it'll be good to have it as a diversification play. And when everything else goes down, energy tends to pop up. So those are the sectors. It's been really interesting to see how the pecking order has really shifted. I think it gives us clues for what's going to work next year. And I'll be coming back to some of these sectors later on to tell you which sectors I'm going to buy into so that I could achieve a really good return in 2024. So let me compare where the S&P is at year to date, and it's going to be close to this number for the whole year. We have 4 trading days left in 2023, and it's at 24.3% year to date, which is a great year. Only 7 years in the past 29 years have been higher. So obviously it's a very good year. And the PE ratio is at 24.59, excuse me. And only 9 years in the last 30 have been higher. So PE ratio is a little bit high. And obviously, a return of 24% is very high. And a repeat is highly unlikely. And I'm not saying that the market's going to go down 24%, but I think that what's more realistic is that the market goes up for the year on the S&P. It could be even, near zero, or maybe up 5%. I don't think it's going to go in the negative. If it does, only a little bit. But it's going to be a hard year to repeat. I think the economy is going to be a headwind. We're going to have a soft landing economy. but it's not going to be a growth economy. If we were looking at, hey, we're going to have a really nice growth period in 2024, then I'd be like, hey, we can have a repeat. But I think we're going to have a recession, and it might be a soft landing recession. We're going to see interest rates go down. And the reason they're expected to go down is that the economy is going to begin to fail. It's going to begin to slow down, more unemployment. And I think those headlines are going to keep investors from really going all in again on 2024 stocks. And therefore the S&P for next year, I think is going to be flat to maybe positive 5%. We can't talk about 2023 without talking about the Magnificent Seven and the incredible rise of these incredible companies. And I'll do a quick review. I updated all the numbers as of the close of the market yesterday, December 22nd. And overall, the Magnificent Seven, all these companies are worth $12 trillion. That's 30% of the S&P. And 493 companies make up the remaining 70%. So obviously it's lopsided. The S&P is lopsided and very influenced by these 7 companies. Let's go over how these 7 companies have been doing. So Apple had a good month. It's up 1.9%. It's up 55% for the year. Phenomenal. And it has a PE of 30. It has a huge market cap of 3 billion. What's Apple going to do in 2024? I'm not an Apple stockholder. I just cannot, I'm not comfortable with a $3 billion valuation. I'm not comfortable with the fact that the, mobile phone business, they've got good competition by very strong players from Samsung, Alphabet, Huawei in China. I think Huawei's internationally is really competitive, far less expensive than an Apple device. So I think Apple has had a hard time growing in 2023. And even though they haven't grown, they're a very popular stock. People understand it, and it's a popular stock, so they invest in it. But we'll see if it loses some of its popularity, and it depends on fundamentals. I think Apple could really go down in price. We'll see. Amazon, incredible company. I owned Amazon up until a few months ago. I sold at a big gain, and I thought that they achieved a price that was above the value I had for them. And I don't have a confident viewpoint on the future for Amazon. They have a high PE, and they've done really well this year, up 79%. Awesome. $1.55 trillion valuation. And it's an incredible company. I look at how much money they have to reinvest in their business. They have to put a lot of capital back in their business. I think that they're in too many businesses. I think Amazon's incredible, but if you count the number of businesses they're in, and they're very different. If you look at their streaming business, it's very different than their commerce business. They have their cloud business. I mean, they have businesses that are very different. At what point will it be too much? Well, history has taught us that some of the best companies that had too many different types of businesses have failed, and they have to simplify and get back to a core set of businesses that are around a particular enterprise skill set, enterprise, advantages that they have. And I think Amazon may someday get to that point. I think the number of businesses is going to weigh them down. They're even in the food business, the grocery business. And I scratch my head on that one. I'm like, why are you running grocery stores? That's a low margin, very expensive business, but they do it. So we'll see what happens with Amazon. Again, I was a stockholder, think very highly of the company, but I think that they're going to have a hard time in 2024. Nvidia is just, I'm so impressed with Nvidia in 2023, how much value the business is worth. They deserve every dollar. I think it's an incredible company. I missed Nvidia. I didn't understand Nvidia. I owned Nvidia a few years ago, and I underappreciated Nvidia. I think they're certainly benefiting from the AI build out. They have a PE that's reasonable based on what they're doing. They're up 241%. I think that's priced at a premium. Although I think Nvidia is incredible, they're going to have to be incredible for 3 to 4 years. And if they pull it off, they're worth 1.2 trillion. If we begin to see the business fade, like they're not growing as quickly as everybody expected, I think there could be trouble ahead. My thoughts on AI is I think AI is incredibly interesting. I think AI is going to be a big benefit to businesses, to people, to students, to everyone, just like search. Think about how we use search, which is predominantly an alphabet solution, and it's really beneficial. It makes us more efficient to search for information, links, videos, get to information, either to do a job, to solve a problem, and so forth. And I think AI is just going to be one additional step in that sharing of information and sharing, I guess, the collective intelligence of our civilization. But I think we're getting over our skis on how quickly artificial intelligence is going to be here, and how quickly businesses are going to have a a viable business. They're going to monetize artificial intelligence. Think about how long it took for other paradigms to take hold, and how hard it's been to figure out which ones are going to be the winners and the losers. So I think that the AI buzz of 2023 was overdone, and it was just repeated over and over again. I hear a lot of examples that are not very good examples of how AI is going to be used. And I hear some good examples, by the way. But there's going to be a lot of pumping of the brakes by governments. I think governments are going to be uncomfortable knowing that, hey, a lot of decisions are going to be made by a machine. We're not comfortable with that. For example, in England, there was a case that was just decided, I believe last week, where a company that used AI to develop a patent uh, applied for a patent and it was declined. And the decision was really that only a human can create a patent. So if the courts don't allow AI to be used in creating of intellectual property that is patented, I think that's a limitation. And that's an example of how we're expecting AI to come about so fast. And I don't think it's going to happen that fast. I think it's going to happen, but it's not going to happen as fast as I think I've been hearing in 2023 that, oh boy, AI is around the corner. It's going to do everything for us. We'll see. So let's talk about Tesla. So Tesla is incredible. I think they're a very popular company, and I just don't believe in the valuation of the company. I believe that Tesla is an automobile company principally, and automobile companies have been around for over 100 years. Tesla has some very strong competitors, and those strong competitors let Tesla build the electric vehicle market, and now they see what is likely going to work for them, and they're entering the market. So you've seen some really well-recognized brands enter the electric vehicle market and begin to compete with Tesla. I think Tesla's going to have a hard time growing. The automobile business, one of the, I think, negative aspects of it is the level of capital you have to put into the business. It's much harder to run factories, employ hundreds of thousands of employees, and have all the complexities of manufacturing and supply chains and so forth. So we'll see how that sorts itself out. But I believe that this company is highly overpriced. And I would say that if you compare Tesla to other automobile companies, they're heavily overpriced. The argument for Tesla is, no, it's a technology company. I get that. I get that they have probably feature sets that, from a technology perspective, are more advanced than their rivals. I would agree with that. But at a certain point, I realize it's a car company. You still have to put all that technology on a set of four wheels. Tesla just had a very significant recall. They've had to recall over 3 million vehicles. And the cost of that recall is going to be substantial. That's the car business. So it's going to be tethered. Tesla's going to be tethered by the fact that the industry they're operating in is going to hold back their valuation. And I think they're overpriced. They have a P of 78. That's a pretty high PE. And you look at their competitors, PEs for their competitors are between 10 and 14. So something's wrong with that picture. And their competitors, again, very strong companies that really know the automotive business very, very well. Moving on to Alphabet. Alphabet has been an interesting company that has not performed as well as some of their rivals. Principally, I think they've underperformed Microsoft to some extent. Although from a year-to-date perspective, they're winning. But I'm referring to like the AI business. Alphabet was probably more conservative, held back some of their projections and so forth, or some of their product introductions, and Microsoft was just pushing the envelope. And it might be that, I think my mentality probably aligns with Alphabet better, that, hey, AI is going to be really big. It's going to be really interesting, but it's coming up too fast. That I don't think the world's not ready for AI. People aren't ready to pay for AI. There's a lot of things that are not ready for AI. And I think Alphabet's taking a more careful approach to AI. Overall, I own Alphabet. It's the third biggest stock position that I have. I have been a fan of Alphabet, Google, for many years, and I think that obviously their search is second to none. But I like the diversification around businesses that they can really operate well, and they continue to grow. I'll note that their cloud business is growing well. It goes hand in hand with the AI push, which is very good. I think their smartphone is very good, continues to grow. They also have the Android operating system that works on more mobile devices than the Apple OS. So the Google operating system is installed in more places. So they just have a lot of good businesses. They have a good PE of 23. And I think the Alphabet stock is going to do well in 2024. Meta had an incredible year, and it's a stock that I'm an investor in. It's my number one position. I think they're without argument the dominant social media, social application company. They continue to advance that agenda. They have billions of regular users log into a Meta application every single month. It's pretty incredible. And they're up 183%. Will they repeat in 2024? Unlikely. They have a good PE, but this compare is going to be tough. And I'm an investor in Meta. I'm not going to sell my shares. I didn't sell them in 2022. I actually bought more shares in 2022. And this has been my number one dollar gainer for 2023. Microsoft is, without me needing to say it, is an incredible company that just continues to grow its products, reinvent its products. And they've handled the cloud generation of software incredibly well. $2.78 trillion is a very expensive price for a company. And we'll see if they can hold up. Even though Microsoft has so much momentum with AI and a lot of other things, they did 56% year to date, which is great, but they didn't do the big numbers like Nvidia or Meta. Even Tesla had a percentage gain better than Microsoft. So I think that is part of the realization that maybe AI isn't going to be an immediate top line revenue growth engine. It isn't going to be an immediate profit engine, and nowhere is it going to generate cash in the near future. So I think there's some careful investing in Microsoft. You saw it over the last month, the stock price actually went down. So there may be some careful investors not trying to get too much Microsoft stock at this time. Their PE is fine. I think it's fine. But I think for 2024, I think Microsoft stock is going to struggle. I think their valuation is really high. They don't have much left in the tank from hey, this is what's new and exciting. I think the AI story, that's 2023. If in 2024, everybody wants to talk about AI again, I think we're beginning to see AI fatigue. I think people are tired of hearing it. We're tired, and we need to start seeing some examples. Okay. And we've had examples of AI for a long time. For example, Alexa, that's AI. And it hasn't revolutionized much, right? It's been around for a long time, or Siri and so forth. So these things have been around us. It's just, it got exciting in 2023. People thought, oh, this thing's going to be, so fantastic and so valuable. Maybe, but maybe it's just going to be, one more aspect of technology that's interesting. But I think it was overhyped in 2023. And the Microsoft stock is going to be held back because if the hype begins to fade, so will the interest in Microsoft stock. So just getting back to the recession, this is Fidelity's website. This is their expectation that we're going to have a soft landing recession. And I think most, investors and economists are predicting the same thing. And the Fed will begin to lower interest rates in order to keep the economy from going too bad and losing too many jobs and it becoming really difficult for the United States. So I think most people agree with that. The one thing that's been interesting about the economy is that I've been hearing about this recession for a year and a half. When's it going to finally get here? Um, so it's been interesting how postponed this recession has been to me. And I don't know if anybody else is feeling the same way. Now, one piece of evidence that tells me that small mid cap stocks are present good value, are underpriced, and is that many of these companies are beginning to be acquired. DocuSign is looking to sell itself. Macy's receives a buyout order offer. Occidental Petroleum is buying Permian, and Chevron's buying a company. Exxon's buying a company. AbbVie's buying a company. Looks like Bristol Myers on Friday announced they want to buy Karuna Therapeutics. So to me, these are really intelligent companies, and they're only going to buy if they're seeing that, hey, we can buy a business that's worth far more than its stock price. And we even come in, like, for example, Bristol Myers Squibb is going to pay a 47% premium on this company. So acquisitions of small, mid-sized companies happen when there's a lot of value out there. And that's one more piece of evidence that's, encouraging me to buy more small and mid-cap stocks. Right. So this is where the rubber hits the road. Where am I buying and selling stocks? Let's start with selling. So first, I think in early 2024, we're going to have a very strong pullback. You can't have 8 weeks of a boom like we've seen over the last 8 weeks without a strong pullback. So somewhere early in 2024, we're going to have a strong pullback. And that's good news for a value investor, because then we can buy companies we really like at a further discount. So it's not bad news, it's just reality. And what I think is going to be a sellable stock in my portfolio are some of these mega cap stocks. And I'm thinking of lightening my position across a couple different stocks. Haven't made decisions yet, but I'm thinking that's going to be a factor to, or I should say, an activity to beat the S&P is don't be too overweight mega cap stocks. They've done great this year for me, but I got to always manage that so that I don't have my portfolio is not dependent on one or two stocks. I'm more diversified than that. And I'm going to sell shares in some of those big winners. I think some of those big winners, I have a Coinbase investment where I've already achieved a 200% return in 1 year. So that's been phenomenal. But do I need to take some shares off the table? Maybe. Meta, I said I wasn't going to sell any shares. I don't think I'm going to sell any shares, but maybe I do sell a couple shares. I did sell shares in Meta at one of the peaks in 2023. I lightened the position by like 6%. And it seemed to have been the right move because the stock went down after that for a couple months. But we'll see. That might be a good move as well. What am I buying? Small mid-cap stocks. I think that's, the cat's out of the bag. I think, if you watch CNBC and listen to other, really smart investors, small mid-cap stocks present a very good value proposition. They have good PEs, good cash flows. They have good upside. They were left behind in 2023, so they're not run up like some of these mega cap stocks have been run up. So that's where I'm really investing a lot of my time, is finding some of these jewels. It's a little more work because there's 2,000 of them and more plus. So finding small cap stocks that I can invest in is taking up most of my time, and I think presents the most opportunity so that I can outperform the market in 2024. Sectors that were left behind. Healthcare, I think, is going to do well in 2024. So I'm going to be buying into healthcare stocks, pharmaceutical companies, and the like. Financials has really been doing well. I think it has probably a couple more quarters of upside potential. So I'm going to keep buying shares in my financial stocks. And material companies, I think material companies have been doing well, and I think they're going to keep performing because materials, especially the scarce ones, they're just needed. They're needed for manufacturing of technology, for the things that we need, essentials and so forth. So I'm going to keep buying into materials companies and other small mid-cap stocks that are in other sectors that present a really strong value proposition to me. The 2023 year has been a real good one for stocks. It's been a fantastic year from a performance perspective. And it's great because in 2022, it was a very difficult year. Stocks really went down. And I'm excited about the new year. I think next year will be a good year, but every market will have opportunity. And as a value investor, my job is to go find that opportunity, to find the companies that are worth investing in and growing my investment in capital towards. And that's exactly what I'm trying to do here, is trying to find the right sectors, right stocks to put more money in so I can keep growing my portfolio. I'd love to hear what you think. Please in the comments, let me know what stocks you think are really exciting for 2024, which sectors you think are really good to invest in 2024. And please challenge anything I said. I'd love to hear your thoughts. I've been collaborating with other subscribers, and it's been really, really good. In 2023, I learned a ton from the people that view my videos and provide feedback. And I would really appreciate if you can provide your feedback on this video. Do me a favor and like the video and subscribe to the channel if you like videos like this. And let me end by wishing you happy holidays